Hey everybody, what's going on? It is James here with Crypto Common Sense, and I wanted to sit down this morning and shoot your July 29th edition of Bitcoin Bytes. So a couple of days ago, I did a video talking about a potential move up toward 28 to 32,000, and of course the market did give up a very nice move. Did not get quite to that $28,000 level yet, but let's take a look at the chart and see what is happening. So first things first, let's do some learning this morning. All right, let's do some learning. So in the last video, I talked about the fact that it was testing its 4-hour 200 moving average, which is this blue line. I also talked about the fact that it was testing its point of control, which at the time was right around this area, but as long as it didn't fall at the bottom of this zone, that we could still talk about 28,000. If it fell at the bottom, we'd have to talk about 10,000. So those signs were pointing to the bull side. I also talked about Fibonacci levels. A lot of people like to claim that Fibonacci levels don't work, and they say, oh, people only use them in hindsight. Nope, not the case. You can go back and watch that last video. And I talked about, we were in this candle right here. I talked about the fact that we were testing the golden pocket, which is that 61.8 level. If we're going from a bear side, that is what I call the hodler's soul crushing zone. From a bull side, it actually is called the golden pocket. I did not make that up. That's really what it's called, the golden pocket. And it looks just like that. And so we should have expected a move up from that pocket. Should have expected a move up as it started to find support on the 200 moving average. And all in all, we could draw a Fibonacci trend extension. It looks something like this. And it would give us a target up around $26,110. Now, oftentimes with these extensions, you'll actually reverse at the 61.8. Something magical about that level. Can't explain it, just know it's the way it is. So we did indeed tag the 0.618, left behind 1, 2, 3, 4 pretty nasty wicks, which was a sign of supply. I had notified Discord before this drop saying that it looked like, bulls were running out of steam a bit. And of course, now we're getting some type of pullback, some type of move down. This is a very small move so far, so time will tell just how far this goes. But so far from the tippy top, it's dropped nearly 4%, currently down about 3%. All right. So on this trade, how could you make money knowing something like this? In the previous video, I talked about the potential for a bull flag here, and I said that we had to wait for setups to come in. Well, setup did come in on this trade, and I posted about that in the Discord. But just as a quick little example for my free YouTube subscribers out there, let's say that you weren't using any specific setups, you were just using price action. Well, you come down to this 200 moving average, you come down to this golden pocket, and if you look what's actually happening here after you get this low, you actually got a lower high, right? It's still in a downtrend. Then you got a higher low, higher high, higher low. Well, as soon as it confirmed either this one or this one as being higher lows, you could have potentially taken a trade there. It would have looked something like this. So you entered when it broke the high of the previous candle. So that would have been this high here at 21,435.81. Put a stop loss at that low, because guess what? If it starts going back down, this is not a new uptrend. It's just chop. So you get a stop loss of about $300, or in this case, $299.07. And if you think this is indeed a bull flag and you think it's going to go up to 26,000, right, using the trend extensions, then what you have is a potential being the key word, for 15, almost 16 to 1 on that trade. Now, in reality, once you start seeing reasons to get out of a trade, for example, 1, 2, 3, 4 giant wicks in a row, probably want to go ahead and start putting in some kind of trailing stop loss. And in this case, if you're using the last candle low as a stop, then you would have been stopped out. Let's find out. Right about there, right? After this candle closed, next candle open, came down, would have kicked you out of the trade for about 7.7 to 1. Meaning that if you risked 1% of your trade account, you would have increased your trade account size by nearly 8%. On a $10,000 account, would have been a nearly $800 win. On a $100,000 account, would have been a nearly $8,000 win. $1,000 account, nearly $80, so on and so forth. Very, very simple stuff. Nothing difficult about this. Nothing complicated about this. It's just rinse and repeat, rinse and repeat. It's not about predicting the future and knowing where Bitcoin is going to go or any other asset is going to go. It's just about knowing that statistically, when you see these types of things happening, it gives you an edge on predicting where the market is headed. A perfect example of having an edge is this chart here. I know that this is a Bitcoin Bytes video, but I want to point this out. I had done this post in June saying, look, here's this post I did last year saying that, lumber was coming up to its hodler soul crushing zone. And I was saying way back in this little bitty picture here that we should get a drop. We did get that drop. So in June, I reposted that saying, look, TA is TA, works the same in every market. A connection of mine on Facebook had asked me if I thought that they, should wait until August or September to basically build a new deck or redo their deck. I don't remember exactly what it was now. Build a deck, it looks like. And I had said, look, right now this move is, oversold, yada, 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 meaning counter rally bounce is likely or could be in the cards before we see more downside. Well, it's exactly what happened. June 14th is the date of the post. This candle right here was June 14th. Lumber moved up over 44%. And then what happened? Right back into our downtrend, trend continuation, right? Just same exact concept, except in this case, it was on lumber instead of Bitcoin. In this case, it was moving down, right? Hodler soul crushing zone instead of golden pocket zone, okay? Same stuff over and over. Works in every single market. If you can trade it, if you can chart it, you can use technical analysis. So as far as what's happening with Bitcoin right now, well, let's take a look at the US 100. So if we take a look at the US 100, this is what the trade looked like on the US 100. And again, if you're wondering where that target comes from, same deal, just like Bitcoin, right? Boom, 13,262 as the target. Right now, what we're seeing is that it's moved a good way up. There was an entry right here. Again, just basic technical analysis. You had an ascending triangle. You had the top of that triangle. You had a breakout, come back down and retest the triangle. It left behind a nice tail. So instead of waiting for the breakout over here, there was a place to enter right here with a stop at the bottom of that tail. Could fail, probably will fail about half the time, but that's perfectly fine because when it works, you can make a lot of money on it. So for example, if this hits at full target, it's going to be an 8.5 to 1 trade. Right now, somebody jumped out. If they got nervous and said, I'm fine, I'll go ahead and get out here, it would be a 5 to 1 trade. 5 meaning 5R, meaning if you're risking 1% of your trade account, you made a little over 5%. Again, $100,000 trade fund, this trader made $5,000. $10,000 trade fund, this trader made $500. $1,000 trade fund, this person could have made $50. You can see how trading is a lot less about magic and a lot less about knowing what's going to happen and a lot more about knowing what the statistics say. This pattern should do this in this particular market condition, so on and so forth. Then you take the trade. You don't worry about the fact that it might be wrong because this is going to fail a lot, at least half the time. This trade loses, but it doesn't matter because when it wins big. Again, you can see right now that's 5 to 1. That means if it loses 5 times and wins once, that person still breaks even. Really, really good odds. And again, nothing wrong with taking profits there because it is coming up to retest old resistance levels from back here. So that's a perfectly acceptable place to go ahead and jump out of the trade if they decide to. Now, what's happening in the bigger picture on Bitcoin or in the short term on Bitcoin, I really don't know. It looks like the US 100 is getting a little bit weak here. And so if the US 100 moves down, I expect that Bitcoin will also move back down. I'd still like to see Bitcoin move back up to that $28,000 level, but we're not seeing the volume, right? We need volume. We need bulls to come in and say, we want to buy at this level. They're not doing that. You can see here that there is one pump here that lined up with the US 100 pump. And then just, nobody wants to buy Bitcoin, right? We're going into a weekend. So of course, today being Friday morning, after the market closes today, then there'll be a whole weekend where, who knows what kind of games are played. Maybe it shoots up to 28,000 over the weekend, some kind of scam pump, maybe not. But I always make sure to be super careful on weekend trading because volume is lower and there is a lot more shenanigans going on. All right. So as far as me personally, I actually did start to nibble on some longer term bearish positions. Those are not naked positions. They're bearish puts on Bitcoin, meaning that my risk is automatically limited and I'm not necessarily thinking it's going to go directly back down from here. But those puts I picked up are for pretty far out in the future. They're for December of 2022. So it's about 4 months off. And so I do suspect that they should pay off nicely for me. Thing being with those puts is I'm okay with it going higher from here. If it does go up to 28,000, it just means I get to add to that position, get a little better deal on the puts. If it goes down from here, it would almost be a little bit disappointed because I don't have a very large position. And while I would make some money on the drop, I prefer to actually go up a little higher first. Let me build a position a little bit and then drop from there. Right now, my risk is literally about 0.1 R, so about 0.1% of my trade fund is all I have on the risk right now. I'd like to get that up to at least a 1% risk or even a 2% risk if the opportunity presents itself. But so far, have not been able to do that. The setup is not good enough. The conviction is just not there yet for a direct move down. So that's kind of what I'm seeing on Bitcoin. We'll take a quick peek at the market cycle chart. Again, this pump is a little bit disappointing so far. I'm still really rooting for that move up to retest this old zone back here. That's really what I want to see. That would make sense to me if that's a denial bounce, that's what's going to happen. Maybe it is potentially possible that this back here was not our anxiety bounce. If you notice, this low did not take out this low. And if you're going strictly by the market cycle chart, anxiety comes after this low. The anxiety bounce is much smaller than the denial bounce. And so it could be that what we're actually getting through here is the anxiety bounce, and that's why it's not as powerful. And it could be that we then drop and get a really big denial bounce, maybe off of this zone down here, like a bounce back up from 40 back up to 60 or 80, and then anger and depression could actually take us out the bottom of this zone all the way back down to these 2018 levels or even lower. It could be that's literally what happens, that we start talking about retesting 2017 levels down through here instead of down through here. So that's a little bigger picture stuff. In the short term, right now, I'm neutral, right? I'm back to neutral. I don't like the fact that bulls are not showing up. I just don't like it. These are weekly candlesticks here. You can see the volume is just not great. You compare that to the volume back in the summer of 2021, a little bit better. And you compare it to the volume back in the bottom of March of 2020, you'll see that there was just massive buying volume. Everyone thought it was a good deal. They were rushing in there to buy it. We're just not seeing anything like that this time. So, yeah, not looking too good, right? Especially with the stock market looking like it wants to maybe pull back off of this bounce here. And if we go out to a weekly chart and we really look at this trend, right, that's an important level back here. This pivot back here is being tested. So it would make sense to kind of trap bulls there and fail and continue that trend to the downside. Also, if you remember in one of the previous videos, I talked about the potential that we might get some kind of inverse head and shoulders if this is indeed the bottom, which I do not think it is. But if it is the bottom, if the 200-week moving average ends up being a bottom, then we might end up with something like this. So either way, right now I would say short-term neutral-ish on the Bitcoin side, but bigger picture, still very, very bearish, still looking for much lower prices on both the stock market and Bitcoin. Hope you enjoyed the video. Make sure you stop now, give it a thumbs up, subscribe to the channel, and click that bell icon to get notifications when I release new updates. And just a heads up, I'm running a special right now on my trading course, as well as my trading indicators. I'm investing in a business. I'm buying some equipment like a skid steer and a dump truck and a trailer for a business. And it's going to cost me a fair amount of money. So I decided to put together a lifetime offer. So if you'd like to join my trading classes, plus get access to my trading indicators, right now you can get access to everything for a one-time fee of $2,997. And that is a one-time fee, meaning as long as that stuff is available, as long as I'm supporting it, you will have access to it and you will never have to pay for it again. Now, I'm not guaranteeing that it's going to be available for 20 years or 50 years or anything like that. I'm simply saying that you will never be asked to pay for it again, whether it's 2 years, whether it's 5 years, whether it's 10 years, whatever the case may be. There is no link for that because, again, all the training stuff and the software stuff is really stuff I do on the side. It's more of a hobby than anything else. So there's no like official sales pages or anything like that. But if you are interested, you can simply send me a private message through one of my social media channels, or you can leave me a comment here and I can get you some details on where you can send some Tether to join that stuff. Of course, also, please remember I am just some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, or any other tradable asset.